Beckman from Central Valley Ag is our corn and soybean market analyst this week. U.S. farmers have put 45% of this season's corn in the ground, along with 8% of this year's soybeans. Those percentages are both ahead of the nation's 5-year averages by 15 points in corn and 2 points in beans. Nebraska's growers have planted only 26% of their corn and 2% of their soybeans, both behind normal pace. The emergence of the country's corn crop is ahead of schedule. 13% is above ground, 5 points ahead of the 5-year average. We talked with Luke Thursday afternoon about selling strategies for corn and soybeans in the USDA's May crop report, but we started by asking for an update on planting across CVA's territory in Nebraska.
Really planting pretty variable across the landscape. Really just depends where you're at. You've got farmers that are probably done, and you've got guys who are really just getting a good start. But on average, with the good weather we've been having the last few days, I'm going to speculate we're at 75% done kind of by the time this next rain shower is going to come through.
Do you think the delays in planting and that rally we saw kind of leading up to bought any more acres going from corn to beans, or may people switch the other way?
Yes, to both a little bit. I think that the initial dollar that we got out of the soybean market, a month ago, probably primed people to say, okay, I'll take a look at it. And if weather's going to be a little bit wet, it's an easy decision. So I think you'll see some flipping. Locally, I don't think that's a huge conversation. I think Nebraska's just, the guys are in the rotation. But Indiana, Ohio have been a little bit wet. I think if you look back at the planting intentions numbers, keep in mind the Delta was up, about 1 million acres of corn year over year. So they've been wet also. So I think you're going to see some beans going down in the Delta that maybe, at least on paper, weren't forecasted.
What things are all impacting the market short term here? What's been fueling the price movements back and forth?
Sure. Well, everybody by now is pretty well versed in what's happened in the soybean trade. It all started with a spark in Argentina with too much moisture there, creating quality and logistical problems on soybean exports, or at least that was the perception, right? Perception's pretty important. The funds got involved in this thing and really, 280,000 some contracts from net short to net long, just a lot of money behind the move. You also have a lot of weakness in the U.S. dollar, and that's created an environment that's been attractive for money to flock towards commodities. So you even had corn benefiting from that, a lot of short covering in the corn trade. What's really transpired this week is there was the expectation that when Argentina was going to have some problems that we would see some soybeans come back to the U.S. Again, perception. We probably saw a little bit, but soybean basis in the Eastern Corn Belt broke down very hard this week on soybeans. So maybe the physical demand really isn't there. And I think the funds maybe are seeing some of that. You're really seeing a little bit of a sell-off midweek as a result. So a little bit of perception, the story was there, we chased it, and now it's, well, maybe reality's not so much.
Funds remain long in both corn and soybeans?
As of last Friday's report, the week prior they were long in soybeans and had started to actually add some length in corn by about 100,000 contracts. So not only had they covered their short positions, they were actually buyers in corn a little bit. I think what that probably is, that sets us up for a good conversation in corn. Not that the fundamentals in corn really have changed. I know it's a little bit dry in Brazil, but I think that it loosened the funds up a little bit and it allowed this market to breathe. I don't think the funds probably have a lot of conviction in which way they're going to trade corn, at least in the short term. I think we need to see some weather. They need to have an idea of how this crop's going to be impacted really before they decide, okay, are we going to short this market again, or is it time to get behind a rally?
A little bit more in Brazil on that safrinha crop of corn. Is that a big concern?
Well, certainly it's beneficial to the bulls, right? We've got burdensome stocks on a world level. So if we can trim back Brazilian production some, they have a pretty tight domestic carryout in Brazil. So that was the conversation that we're going to import some corn from the U.S. even. That business would not be large by any means, but it does lower the balance sheet a little bit when you look at world numbers.
Let's talk about selling strategies. We'll start with old crop. First of all, how many beans are still left? Are there selling strategies for that? And then we'll move into corn. Yeah,
good question, Jeff. The soybeans are interesting. The farmer sold so many beans on this rally higher. I don't think they have a lot of bullets left to fire. So you talk about hedge pressure and what could develop in the bean trade. I don't think there's a lot out there for the soybean crop yet. Corn is a different story. I think there's plenty of corn to be sold yet. It's going to be very sensitive to what the Board of Trade does. And as farmers all over are probably, it's a pain point for them right now, certainly, is what's happened with basis. Local market can't digest that much corn when it hits it at once. So really, it's going to be very interesting to see how this corn market develops. If there's some weather complications, prices could go up, but your basis is really going to be defensive. So if they have old beans, sell them, continue to sell, take advantage of this strength. Corn's a little bit tougher. If we see good futures levels, you could actually hedge corn and wait for basis to get a little bit stronger, but I think our best basis opportunities have long since passed.
Where do you like selling opportunities for the 2016 crop?
Yeah, that's a bright sign. We've really been talking to our guys about, the old crop corn's a little bit tough, but it feels like new crop's a great opportunity. We've poked our heads above $4, and the conversation with producers in this type of environment really should be about, can you make money with corn at $4 on the board? That conversation is different for everybody, but if you can, you make margin above break-even costs, and it lowers what we need to pay the bills on the rest that you have unsold. That's so important. Do that early, and it makes the rest of your year so much easier. The other side of that is if you say I'm friendly and you don't sell anything and the market moves lower, you're in a position that doesn't feel very good. So which situation would you rather have? Sell a little bit, watch the market go up, don't sell anything, and watch it go lower.
How aggressive are you right now in trying to sell anything for the 2017 crop?
Kind of a similar conversation to what we just talked about. If producers are typical forward sellers, that's something you do consistently, and there's profits available. I know we don't know all the costs. That's always the pushback that we get, but you have a pretty good idea of what they should be. Absolutely. You continue to make percentage sales with corn above $4. What a great place to start. Going to take the pressure off of that campaign as well.
What are your expectations for the May WASDE report?
Yeah, next Tuesday we'll see numbers from them. That's the first time that we publish the new crop supply and demand. They will use acres from the March planting intentions, So big numbers on the initial 16-17 balance sheet. Everybody knows that. Old crop will probably see export demand go up a little bit in both corn and soybeans. We've had a really nice stretch of exports in both. The carryouts, unfortunately, are still healthy enough to where it's not a major market.